What I'm about to tell you could be the difference between protecting your wealth and watching it evaporate right before your eyes. And I'm not being dramatic here. I'm being deadly serious. I'm Kevin O'Leary, and I've built a $400 million fortune over 4 decades by understanding one fundamental truth: money flows to where it's treated best. And right now, money is flowing into gold at a pace I haven't seen in my entire career. Before I get into this, hit that subscribe button right now. Smash it. This channel is about building real wealth in a world that's trying to steal it from you. And if you're serious about protecting your financial future, you need to be part of this community. Subscribe now. Here's the brutal truth that nobody wants to tell you. Your dollars are dying. Every single day you keep cash sitting in a bank account, you're getting poorer. Every single day you trust the system to protect your purchasing power, you're being robbed. And the people who understand what's happening right now, they're moving their money into hard assets while everyone else is asleep at the wheel. I'm going to tell you exactly why gold is about to explode, and more importantly, what you need to do about it before it's too late. Let me tell you something. I meet people every single day who think they're doing the right thing. They've got money in savings accounts. They've got bonds. They think they're being conservative and responsible. And you know what? They're terrified because deep down, they know something is fundamentally broken. They watch their grocery bills go up. They see gas prices fluctuate wildly. They notice their rent or mortgage eating up more of their income every single year. And they feel powerless. They feel like the game is rigged. And they're right. The Federal Reserve has printed trillions of dollars out of thin air. The M2 money supply has expanded by over 40% in just the last 4 years. Do you understand what that means? It means the dollars you're holding are worth 40% less in real terms. The government has inflated away your purchasing power, and most people don't even realize it's happening. Here's what kills me. People think inflation is over because the news says it's coming down. They see a headline that says, "Inflation dropped to 3%, and they think everything's fine." Wrong. That's 3% on top of the 8 to 9% from last year, on top of the increases from the year before that. This compounds. Your dollar has lost 20–25% of its purchasing power in the last 3 years alone. Now, I know what you're thinking. Kevin, what am I supposed to do? Put my money under a mattress? No, that's even worse. You need to move your wealth into assets that can't be printed, can't be inflated away, and can't be manipulated by central banks. I'm going to share 4 specific reasons why gold is about to experience a surge unlike anything we've seen in modern history. These are the same principles that billionaires and sovereign wealth funds are using right now to protect their wealth. Most financial advisors won't tell you this because they make money selling you stocks and bonds. But I don't work for Wall Street, I work for me. And I'm telling you the truth. The first thing you need to understand is that central banks around the world are buying gold at a pace we haven't seen since 1950. And when I say buying, I mean buying aggressively. Let me give you some numbers that should shock you. In 2022, central banks purchased 1,136 metric tons of gold. In 2023, they bought another 1,037 metric tons. That's over 2,000 metric tons in 2 years. To put that in perspective, that's the highest level of central bank gold buying in 73 years. Now, why does this matter to you? Because central banks don't do anything by accident. These are the institutions that control monetary policy. They have access to information and analysis that regular people never see, and they're terrified. They know what's coming. They know the dollar system is under stress. They know that global debt levels are unsustainable, and they're protecting themselves with gold. China's central bank has been buying gold for 17 consecutive months. Russia has been accumulating gold since 2014. India, Turkey, Poland, all of them are loading up. These aren't random purchases. This is a coordinated move away from dollar dependence. Here's what this tells you. The smartest financial institutions in the world are betting that gold is going higher, period. And when central banks buy this aggressively, supply gets constrained. When supply gets constrained and demand keeps increasing, prices explode. Now, I can already hear the excuses. But Kevin, gold doesn't pay dividends. It just sits there. You're right. Gold doesn't pay dividends. You know what else doesn't pay dividends? Your rapidly depreciating dollars. Gold preserves purchasing power. That's its job. And right now, it's doing that job better than any other asset class. Poor people worry about dividends from stocks that could crash 50% in a recession. Rich people protect their principal first and then worry about growth. Which one do you want to be? And that brings me to the second thing you need to understand, and this is going to upset a lot of people. But here's the truth. The dollar's dominance is ending. For 80 years, the US dollar has been the world's reserve currency. Every country needed dollars to buy oil. Every country needed dollars to conduct international trade. That gave America an extraordinary privilege. We could print money and export our inflation to the rest of the world. That era is ending. The BRICS nations, Brazil, Russia, India, China, South Africa, are actively working to create alternative payment systems that bypass the dollar. Saudi Arabia is now accepting yuan for oil sales. The petrodollar system that's been in place since 1974 is being dismantled right in front of our eyes. France just completed its first yuan-settled LNG trade. These aren't small developments. These are tectonic shifts. Let me hit you with some more numbers. The dollar's share of global foreign exchange reserves has dropped from 73% in 2001 to 58% today. That's a 15 percentage point decline, and it's accelerating. Every single percentage point that drops represents hundreds of billions of dollars flowing out of U.S. Treasury bonds and into other assets. And a huge portion of that is going into gold. Do you know what happens when countries decide they don't need to hold as many dollars? They sell U.S. bonds. Bond prices fall, interest rates rise, the dollar weakens, and gold. Gold does exactly what it's supposed to do. It protects wealth. Think about this logically. If you're China, and you've accumulated $3 trillion in foreign reserves, mostly held in dollars, and you see the U.S. government adding $2 trillion to the national debt every single year, what are you going to do? You're going to diversify. You're going to buy assets that can't be printed. You're going to buy gold. And here's what kills me about this situation. Most Americans have no idea this is happening. They're watching Netflix and scrolling social media while the entire global financial architecture is being rewired. They're going to wake up one day and wonder why everything costs twice as much. The answer is sitting right here. If this is making sense, smash that like button right now. Tell the algorithm this content matters, because I promise you, mainstream media is not going to tell you what I'm telling you right now. Poor people trust the government to protect their money. Rich people understand that you are your own central bank and you protect yourself. Which one do you want to be? The third thing you absolutely must understand is that gold supply is constrained in ways that most people don't appreciate. We may have already hit peak gold production. Let me explain something to you. Gold is a finite resource. Every ounce of gold ever mined in human history would fit in a cube about 69 feet on each side. That's it. That's all the gold that exists above ground. And the rate at which we're finding new gold deposits, it's declining. Major gold discoveries peaked in 1995. The average time from discovery to production for a new gold mine is 15-20 years. That means the gold that's being mined today was discovered decades ago, and we're not finding enough new deposits to replace what's being mined. Global gold production has been essentially flat since 2016, hovering around 3,300 metric tons per year. Meanwhile, demand is surging. Central banks are buying, investors are buying, jewelry demand in Asia remains strong. You cannot increase supply fast enough to meet this demand. Here's what this means in practical terms. Imagine you're at an auction and there are only 100 items available, but 150 people want to buy them. What happens to the price? It goes up. Simple supply and demand. And we're seeing this play out in real time in the gold market. The cost of mining gold has also increased dramatically. All-in sustaining costs for gold miners are now around $1,200, $1,300 per ounce. That means gold has a production floor. It's very unlikely that gold drops below mining costs for extended periods because miners would simply shut down production, which would tighten supply even further and push prices back up. Now, I can already hear people saying, "But Kevin, can't we just mine more gold?" No, you can't. Gold deposits are geological formations that took millions of years to create. You can't just decide to find more gold because the price is high. The easy gold has already been found. New discoveries are deeper, harder to access, and more expensive to extract. Let me give you another data point. South Africa used to be the world's largest gold producer. In 1970, they produced 1,000 metric tons per year. Today, less than 100 metric tons. Their mines are depleted. They're going deeper and deeper into the earth, and it's becoming economically unviable. This is a structural supply constraint that isn't going away. And when you combine constrained supply with surging demand from central banks, investors, and wealth preservation needs, you get explosive price moves. Poor people think supply and demand don't matter. Rich people understand that commodities with supply constraints are wealth preservation vehicles. Which one do you want to be? Listen carefully to this next one because this might be the most important point I make in this entire video. Gold isn't just an investment, it's insurance against catastrophe. Throughout history, gold has done one thing consistently. It preserves wealth when everything else falls apart. When currencies collapse, gold holds value. When stock markets crash, gold holds value. When wars break out, gold holds value. This isn't theory, this is thousands of years of human history. And here's what I need you to understand. We are living in the most fragile economic and geopolitical environment I've seen in my 40-year career. The global debt to GDP ratio is at all-time highs, over 350% when you include government, corporate, and household debt. Interest rates are still historically high, which means debt service costs are exploding. Something is going to break. You've got wars in Ukraine and the Middle East. You've got tensions between the US and China, reaching levels we haven't seen since the Cold War. You've got commercial real estate imploding in major cities. You've got regional banks failing. And the Fed's solution? Print more money and hope for the best. Do you know what happened to gold during the 2008 financial crisis? It doubled from $800 to $1,900 between 2008 and 2011. Do you know what happened during the pandemic panic? Gold hit all-time highs of $2,070 per ounce in August 2020. Gold does its job when everything else fails. Let me hit you with another scenario. What happens if we see a sovereign debt crisis? What happens if a major country defaults on its debt obligations? What happens if the banking system faces another crisis like 2008, but this time the central banks have already exhausted their playbook? Gold becomes the safe haven. Here's the thing that keeps me up at night. We're $34 trillion in debt as a nation. We're adding $2 trillion per year to that debt. The interest payments alone are approaching $1 trillion annually. That's not sustainable. At some point, bond markets are going to demand higher yields, which makes the debt spiral worse, which creates more risk, which drives more capital into gold. People ask me, Kevin, what's your target price for gold? I'll tell you exactly what I tell my investors. I don't care. I'm not buying gold to trade it for a 20% gain. I'm buying gold because when the inevitable crisis comes, and it will come, I want to be holding real assets that maintain purchasing power. Now, I know some of you are thinking, this sounds like doom and gloom. You're just fear-mongering. Am I? Go look at the history of fiat currencies. The average lifespan of a fiat currency is 27 years. The dollar has been off the gold standard since 1971. That's 53 years. We're on borrowed time, and central banks know it. That's why they're buying gold. Poor people think the system will always protect them. Rich people understand that systems fail, and you need insurance when they do. Which one do you want to be? So let me bring this all together for you because this is critical. Central banks are buying gold at 73-year highs because they know what's coming. The dollar's reserve currency status is eroding as BRICS nations create alternative systems. Gold supply is constrained with peak production likely behind us while demand surges. And economic and geopolitical crises are accelerating, making gold the ultimate insurance policy. These aren't separate trends, they're all connected, and they're all pointing in the same direction. Gold is going significantly higher. You have a choice. You can keep doing what you're doing, sitting in cash that loses purchasing power every single day, trusting a system that's actively working against you, hoping that somehow it'll all work out. Or you can do what billionaires and central banks are doing right now. You can protect yourself. This isn't about getting rich quick. This isn't about speculation. This is about wealth preservation in an environment where your wealth is under attack from every direction. Inflation, currency debasement, geopolitical instability, and reckless government spending. Here's what I want you to do right now. As soon as this video ends, I want you to take a hard look at your portfolio. Ask yourself, how much of my wealth is protected by hard assets? If the answer is 0 or close to 0, you have work to do. Start with 5 to 10% of your portfolio in physical gold or gold ETFs. If you're more aggressive and understand the risks, you can go higher, but you need exposure to this asset class, period. Open an account with a reputable dealer. Buy physical gold coins or bars, American Eagles, Canadian Maple Leafs, gold bars from recognized refiners. Or if you want liquidity and ease of trading, buy GLD or IAU, which are gold ETFs backed by physical gold. Just do something. Don't sit there paralyzed by analysis. And here's the mindset shift you need to make. Gold isn't an investment you trade, it's wealth insurance you hold. You don't sell your home insurance when the premiums go up. You don't cancel your health insurance because you haven't gotten sick. Gold works the same way. You hold it because you hope you never need it, but you're prepared if you do. This isn't complicated, it's just uncomfortable. Because it requires you to admit that maybe, just maybe, the system isn't as stable as you've been told. It requires you to take responsibility for protecting your own wealth instead of outsourcing that responsibility to institutions that don't care about you. If this video opened your eyes, I need you to smash that like button right now. Tell the algorithm that this content matters. Because I promise you, the mainstream financial media is not going to give you this information. They're beholden to advertisers and sponsors who profit when you stay confused and dependent on the system. Leave a comment below and tell me, which of these 4 reasons resonates most with you? Is it the central bank buying, the dollar's declining status, the supply constraints, or the crisis insurance aspect? Be honest, I read every comment and I want to know where you are in your wealth protection journey. And if you haven't subscribed yet, what are you waiting for? Hit that subscribe button. Become a member of this channel. We're building a community of people who understand that financial independence requires financial education and action. We're the people who see what's coming and prepare instead of panic. We're the people who take responsibility for our wealth instead of blaming politicians and central banks when things go wrong. Here's what I want you to understand. I've spent 4 decades building wealth in every market environment imaginable. I've seen booms and busts. I've made money in good times and preserved capital in bad times. And the single most important lesson I've learned is this: you cannot outsource your financial security to anyone else. Not to the government, not to your employer, not to Wall Street. You are responsible for you. Money doesn't care about your feelings. It doesn't care about your political beliefs. It doesn't care about your excuses or your fears or your hopes. Money only cares about the decisions you make and the actions you take. Right now, smart money is moving into hard assets. The question is, are you going to join them or are you going to be left behind? The gold market is telling you something. Central banks are telling you something. History is telling you something. The only question is, are you listening? Now get out there and protect your wealth. I'm Kevin O'Leary, and I'll see you in the next video.